Hi everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here to understand what's exactly happening in terms of the currency market. So, starting with the flows, we have been seeing the inflows now at least coming on to the market, particularly when we talk about debt. Even equities, I think they have recovered really well. So, overall, if we talk about a number, considering equity and debt together for the month of March, then we have seen inflows to the tune of roughly around 33,000 crores, which is a decent inflow considering what we saw in terms of the outflows which we seen in the Jan and the Feb month. Also, if we talk about what RBI has been doing, they have been doing a tremendous job while maintaining the liquidity into the system. And now they have announced an OMO for 80,000 crores, breaking down into four tranches of 20,000 crores each. This clearly indicates two things. One, obviously, RBI is extremely serious about liquidity. They want to maintain a certain liquidity into the market. Also, it also clearly indicates that starting the new fiscal year, they still wanted a surprise because none of the market participants had been expecting any kind of OMO suddenly coming into a picture for the liquidity side, and it came, which clearly indicates an intent of growth. It also clearly indicates an intent that even if it is a new fiscal year, the focus still remains on liquidity. So I think it's a healthy sign from that side. If we talk about the forex reserves, they have grown to the tune of $658 billion from the lows of $623 billion. I think this FX reserves may start rising in, considering the dollar rupee pair has been at a lower level of around 85 half 85.60. So I think these are decent levels. I think these inflows can be absorbed. So I think the FX reserves will continue to rise from here. That's the personal opinion. If we go to the global trajectory, I think it's quite important to see how the Trump tariff takes place. That will definitely be announced Indian Standard Time 1:30 a.m. That is on 3rd April. That is what we can say. So, but I think it's an event which no one can judge at this point in time until unless the words are out into the market. And still, even if they are out, what kind of market anticipation and expectations are will always differ in terms of the entire reaction in terms of the financial market. So I think we need to understand that how these tariffs take place. Do we differ, or do the intent of these tariffs are not that enough, or it is over exaggerated? So I think that time will tell. But yes, it's one of the hanging sword which is there, so it cannot be ignored. Geopolitical tensions at this point in time are pretty silent. It's not making much of a noise, so nothing on that front. Gold has rallied above $3,100, so it's purely the risk on scenario where gold is also benefiting because of that kind of the uncertainties which oversee globally it prevails. So that's another side. But if we talk about the euro dollar pair, the GBP dollar pair, they are quite in a range. Not much of movement till now, hovering around. If we talk about the GBP dollar, that's 1.2 at 602, near 1.30. Euro dollar not breaking 1.0720 levels, holding those levels and trying to bounce towards 1.0880 levels again. If we talk about the dollar JPY pair, again between 148 152 broader band. So not much there. Dollar index just consolidating around 104.20. 103.20 acts as a very, very important support, while a break of 104.60 can open doors for 105.30. While overall, if we talk about a 10-year US Treasury yield, they have definitely cooled off from almost 4.4% to 4.15%. Considering the anticipation of rate cuts remain at least for the month of June, with the CME anticipating around 85% of probability of a rate cut in June. So I think yields are also reacting because of that. And if we talk about a dollar rupee pair, yes, the March end is over. The influx of the revenue of the INR liquidity or the demand of INR now may soothen off. So I think these are decent levels for importers to bargain and hedge their exposure in the near term for 3 months. Our anticipation of dollar rupee remains at 85.20, acts as a very, very strong support. In fact, even if we want to put it in a narrow range, then 85.40 acts as a narrow support and an immediate support, while 85.85 may be tested, followed by 86.20. So we are open towards 86 plus levels once again, considering the tariff structure, if we understand in more clarity. So, well, that's all from my side, friends. Thank you so much for your time. Hope you found our insights valuable. Thank you.